I'm Lee Stone, and this is your UFXBank Week in Review. Today we will be discussing some of the key events of the last week and the relation to world currency markets. Shortly, I will be joined by analyst Martin Smith, who will be providing us with his insight on the top stories and what we might be able to expect in the coming week. I will also ask him to provide us with some technical Forex analysis, and of course, we will have our featured segment, Ask the Broker. In news this week, the US dollar had a tough week overall amid more bad news from the Fed. The dollar traded at a 14-month low on Friday, sending the euro around 130 levels. But our top story today comes out of China, where growth concerns are having a major impact on speculation in world markets. For more on this, I will go now to our own Martin Smith. Martin, how are you?
Greatly, thank you.
Martin, what can you tell us about what's happening in China?
China, Beijing has returned its fiscal policy back to normal after extending their credit policies to record levels in order to counter the global crisis. This in turn has slowed down their economy and will likely extend over the rest of the year. Their annual GDP growth dropped to 10.3% in the second quarter from 11.9% they experienced in the first quarter of the year. This was slightly under the expected 10.5%. What was unexpected, however, was the significant decrease in factory growth, and this fell to 13.7%, which was well below market forecasts.
So what can we expect then for the second half of the year?
Well, most economists aren't expecting any dramatic policy changes as a result of these figures. Chinese exporters haven't been hit by the slowdown. This is mostly because they have a huge backlog of orders, which will keep them busy for the coming months. However, the debt woes out of the Eurozone are likely to cause concern because of a possible decline towards the end of the year, and this may put pressure on exporters in the coming months. The official China Securities Journal said that in the second half of the year, external demand will gradually weaken, and the dividend from the trade surplus will fall. Now, this in turn requires an increase in overall social investment and a halt to tightening of both fiscal policy and monetary policy. Well, to me, this suggests that the tightening of monetary policies on the part of the Chinese government will likely ease over the remainder of this year.
The US dollar dropped to a 14-month low on Friday against the euro. What can you tell us about that?
Well, it's quite simple, really. There's been strong speculation that the US economy has slowed down significantly, which in turn increases the likelihood that interest rates will remain near bottom levels. Now, reports from the Fed meeting last month suggested that policymakers have trimmed their forecasts for growth, and this furthered concerns that the economic recovery is slowing. The 2-year and 10-year Treasury notes traded at record lows on Friday, which is not a good sign. And as long as poor data continues to be released out of the US, we can expect the dollar to continue its decline.
Okay. Many are saying that the Australian and US dollar is a currency pair to watch this week. Could you give us some technical analysis on this?
The Aussie-US dollar has reached and tentatively exceeded its 0.8850 resistance target after breaking out above its prior trading range resistance at 0.878590. Now, currently, as price action has now tentatively broken out above 0.8850, further bullish momentum on this move within the context of the current short-term uptrend could potentially begin to target further key upside resistance around the psychologically important 0.90 price region. Now, downside support in the event of a turn down near current resistance continues to reside around the prior 0.878590 broken resistance.
Now let's move on to our segment, Ask the Broker.
Right.
Richard Morel of Lyon, France writes, I'm interested to know what time frame you recommend for trading Forex.
Well, so viewers can understand, I believe he's referring to time frame analysis, which is a useful tool that many traders utilize in order to determine when to buy and when to sell. Now, by studying currency charts, we can determine whether a currency pair is on an upward or a downward trend. Now, often traders will miss clear levels of support or resistance. They may fail to read larger market trends, or they can also misread the appropriate stop-loss levels. So one method is often used to increase chances of success is called multiple time frame analysis, and it aims to better prepare a trader for getting in at the right opportunity to buy or sell, and then to exit at the most appropriate time. Now, multiple time frame analysis is where a trader takes a look at the same currency pair over several different frequencies or time compressions to determine how the currency might move. I mean, for example, one can look at long-term time frames, such as a daily or weekly chart, to see the overall market trend for that currency pair. You can then look at a medium-term time frame, such as an hourly chart, to see the more recent trend. Then, of course, you can look at a short-term chart, perhaps a 5-minute chart, to determine how the pair is moving in its most current trend. Now, many traders believe that if all three charts are following the same trend, there's a very high probability that that trend will continue. Now, in the event that the long-term trend doesn't line up with the medium or short-term, for example, which is quite common in fact, a trader must then make the decision based on the data he has analyzed of when to buy and when to sell. Ultimately, all of the time frames are useful, and there's really no specific time frame that works best. You must first determine really what type of trader you are. Day traders use 30-minute and even 5-minute graphs. Momentum traders use 1-hour, 4-hour charts, and so on. So you must understand whether you're a day trader, a momentum trader, breakout trader, event risk trader, or one of the many other types. And this will help you to determine how long you want to hold on to a contract and when is the most opportune time to exit.
Thank you very much for that. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit your own questions to our weekly broadcast, please email your questions to Martin Smith at AskTheBroker@UFXBank.com. I'm Lee Stone, and this was your UFX Bank Week in Review.